Hey, good morning, guys. It's BA here. It is Tuesday morning, December 13th, 2016. And hey, I just wanted to give a quick update. This is not the normal agenda I follow, but I'm trying just to get our recording software back up. So this is a dry run. I've got a new version loaded up. I'm operating on a different computer system. So, yes, I have a computer vortex in my trading office. Uh, like I mentioned in the written text yesterday, my primary computer went up in a puff of smoke yesterday, and it was literally a large puff of smoke. Looked like somebody tossed a smoke grenade in here. So anyway, I just want to cover a couple of things and just to give this a run through. And the first thing I'd like to look at is the crude market. So let's pull up crude and take a look here. So here's on the left is a daily chart. You can see we've got a little bit of a bid going on today, and let's put this into context. So we're a good ways away from the upper level right here. Um, what I'm thinking about is this is what's perplexing about the crude market, and that is all of the news that came out. I mean, we've had OPEC and non-OPEC alliances created for the first time, and I mean, I'm not a crude historian, but we'll say a very long time. Some of the biggest liars in the world have said that they're coming together to curtail output, and the market responded yesterday at the open the way it should have, which was very bullish. But then it sold off all day long. So I don't know what that really means. I'm not a crude analyst. You guys know I have no skills when it comes to analyzing these markets, but I am very intrigued by the price action. Um, and that being, what really intrigues me most is the fact that I don't know if there could be any more bullish news out than what was announced over the weekend. And the market just couldn't hold that initial um, ferocious rally off of the open yesterday. Now it may completely take it all back again today, but what I'm saying is this is something to watch going forward. I think Drew said he was short crude. It was a good call yesterday, um, and I'm looking for a place maybe to put a short crude trade on myself, unless the market just rallies up today. So I'm uh, I'm watching the price action very, very closely. Of course, I still have my current position on. Let's take a look at that. I'll show you what we have in the crude market. So this is what I have right now going into, we've got 2 days to go. So I'm really not looking to hold this thing, um, to expiration. I really don't want to do that. Every time I do that, this is reminiscent of the days when I was trading the S&Ps, and every expiration day they would have an aberrational move. Last December, uh, that's what I'm referring to. So the last time I was trading crude going into the expiration, which was just a couple of weeks ago, I took a shot on a weekly position. Yeah, we had Putin come out and made that announcement, and what did it rally, like 6% in a day? Yeah, so I have a feeling that that potentially could happen again. So I am looking for a reason to exit this trade. All I need to do is get my theta line back up to zero. We don't have far to go, so this could turn out to be a really good trade. We'll see. We'll see how we shape up today. Looks like crude's catching a little bit of a bid right now, so I just plan on trying to hold it right in between the break evens and get it back to zero as as good as I can. So that's the crude position. Let's take a look at gold right quick. We're I'm going to be watching gold and IV and gold very closely going into tomorrow. We'll see what the cards hold. This may be one where I put a defined risk trade on. Maybe at the money. I don't know. I haven't really decided yet. So, but I am going to be tilting toward a long gold position, simply because it's just been beaten down quite a bit. Bonds are starting to catch a little bit of a bid. Gold's followed bonds, fairly closely here, so maybe gold's not far behind in a little rally. So everything says that gold is definitely on the bottom of the on the bottom floor, and I don't know. Maybe we catch a little bit of a bid here in the gold market. So um, it's worth a play. If whatever I do play, I'm playing for about 2 months out. Some of the studies in Sentiment Trader indicate that the patterns um, that it's set up in the past that replicate what it's doing now. It's been higher every time 2 months from now. Um, so it's worth a shot, to take in the gold market. So that's one that I'm looking at. Let's take a look at the bonds. We see we caught a nice little bid yesterday. I don't think it means anything. Bonds could rally 10 handles. That's what we're looking for, is for a 10 handle rally in the bonds. I don't know if we get it. I think nothing's going to happen until after this rate hike announcement, and then we'll see if we get some two-sided action in the bond market. But two-sided action would be great for this thing to return back to some really whippy action, with an upward drift, get it at 10 handles up or so, and then that's when we make our trade for the next 30 years, as we just continue selling bond futures and selling puts against that thing. You can do the same thing in TLT. Sell TLT short, it's a very liquid stock, or ETF, and sell puts against it if you wanted to play that. There's the whole things. You could do the defined risk trades, whatever you want to do. Just buy yourself duration when you do this. If I'm trading futures, I'm not going to be worrying too much about duration. I'll just sell the puts, anywhere from 30 to 45 days out. That's the trade that I'll plan on keeping with that one. Let's see, what else do we have that's of interest today? Let's take a look at the NASDAQ. Yeah, NASDAQ is, it's flirting. It's had a real hard time at this level. A really hard time. Every time it gets back up in here, it gets smacked right back down. So I have a feeling when she does break, and all the other markets are breaking at the same time, NASDAQ will probably just make up ground and really, really scream higher. So when you compare that to the Russell, it's not even a comparison. I mean, the Russell is just ripped, just completely ripped higher. One of the updates that I didn't get out to you last week because of some computer problems I was having was an anomaly that we saw last week when stock market was making new highs and the VIX was making highs as well, or not highs, but the VIX was going up at the same time the stock market was ripping higher, not just trickling higher, but ripping higher. So, I haven't ever seen that before. Of course, I've seen sporadic days where S&Ps are up 5 points and the VIX is up 50 cents. That's usually a good signal that, within 3 days you're going to see just a little pullback. But, yeah, I've never seen 2 days when the market was ripping as high as it was, and the VIX was going higher as well. So, again, I mean, we're in an abnormal market. And that's going to continue. It'll keep getting worse. We've talked about this for years, that the closer we get to the end, the more abnormalities we're going to see, just the more aberrational moves we're going to be part of, and that's going to continue. And then the bust, whenever this thing busts, it's going to be abnormally large to the downside. So, I don't think we're going to get back to a normal market for quite some time. Normal market means the S&P rocks back and forth forever. The S&P doesn't trend. I mean, the S&P is one of the best trending markets out there right now. It never used to be that way for decades. It was the worst for trend followers. They never followed the S&P. But hey, if you've done nothing for the past six or eight years, but trend followed the S&P, you'd have been a champ. But those things have a way of reverting back to the mean, and that's what it's all about, reversion back to the mean. But we have some excess to wring out of it from the upside, and that means it's going to be aberrationally large to the downside. And then, once it flushes that out, we might get back into a period of normal market behavior, providing that the government intervention doesn't come through and try to fix it once again, like they always do. I think that's about it. That's all I really wanted to cover. So again, just to recap, let's watch crude, the price action in crude. Let's see what it actually. Yeah, we're still catching a bid right now, so we're rallying up a little bit. Don't know if the good news really is good news, or if there's some underlying reasons why the market shouldn't be as good as it is. But let's just remind ourselves and keep in the forefront of our mind that, hey, there couldn't be any more bullish news in the crude market than what came out over the weekend. So if there's supply demand issues that are that overshadow that, maybe that will come into play. Anyway, I'm watching very closely for a crack to see if I can go in there and lay into some calls, selling some calls on this thing with about 30 some days to go. So we're going to be looking at that market going into tomorrow. We're going to be looking at gold for potential long play in gold, and that's about it. We're going to be watching the stock market. It's really fishy right now, is about the best way I can describe it in this up move. But we know how it is. It can go up forever on fumes. And right now there's more people talking about the melt up than we've had probably since I think 2006 or so. When you measure the amount of media attention that this melt up is doing, everybody's on board with it. It's not the time to get long the stock market. I mean, this move has been abnormally large to the upside, and right now everybody is expecting it to go up further. And you know what happens when everybody expects something to happen in the stock market? Yeah, it really doesn't want to participate. So that's why I'm still short in my retirement account with just short call spreads in the SPX. I mean, we're up right now in the stock market another $6.50 in the S&P. The Dow's up 69 as we're talking. Russell's up. NASDAQ's up. So it's just another green day amongst the other green days that seem to just continually never end in the stock market. So anyway, hey, that's a wrap for this morning, guys. Hope to see you tonight. And this is BA signing out.